Welcome to the Real Estate Investing School podcast. I'm your host, Joe Jensen. Our guest today is Blake Dailey. I'm excited to dive into this one. Blake began his real estate investing career buying and renovating hurricane-damaged homes in Panama City, Florida. While doing that, he stumbled upon high cash-flowing short-term rental strategy by acquiring houses with ADUs, additional dwelling units. After surpassing his W-2 income with his cash flow, he pivoted to commercial multifamily and syndicated his first large apartment deal, which was a 66 unit in North Carolina. Combining his experience with raising money and doing commercial deals and buying and renovating and renting out residential short-term properties, Blake jumped into commercial short-term rentals where he was converting rundown motels into renovated boutique hotels. He now owns 5 of those. He owns a handful of short-term rentals from California to Florida to Utah, along with the 66-unit apartment complex. He's the CEO of Adventure Stays, which buys, renovates, and operates boutique short-term rentals. His company has over 30 employees, virtual and U.S.-based, and that manages his whole portfolio of short-term rentals through that. So doing quite a bit of stuff, a lot of different pieces of the game. Welcome to the show, Blake.
Thanks, man. I'm excited to be on here and get into this stuff, man. I could talk real estate all day, so you might have to cut us off when we get to that time.
I know that's how it goes, dude. It's like, I don't know what it is about real estate investors specifically, but we just love to talk about this stuff. I don't know a more open community that's just like, let me tell you everything, you know?
Yeah, man. I like it. Let's jump in. I'm excited to be here.
Well, sweet, man. So you've done quite a bit. Obviously, one of my first questions I always love to ask, and it's always interesting, is just like, what was the first thing? Like, how did it all start? You know, because people see this like, oh man, like I just read your bio, and it's like, that's pretty impressive. You've done quite a bit. Like, how did it all start? You know, I know you said you began with, doing the renovating of hurricane damaged homes, which is kind of niche and unique. I want to talk about that, but how did that even get on your radar?
Yeah, so it was it was really kind of like a snowball building up, and like that snowball early on was like education, the podcast, and really kind of like positioning myself, because if I could have, I would have just jumped in. I'm very much a build the airplane while I'm flying it kind of guy, for better or for worse. But I got into it while I was still at the Air Force Academy, and cadets couldn't own rental property, based on like the rules and regulations we had there, which was one of the maybe a million, because I think they figured out that cadets were like buying homes or like renting places outside of base and like getting in trouble and stuff like that, throwing parties. So I was kind of just using that time to kind of build up my background and figure out the strategy that I wanted to jump into when I actually, graduated and got to Panama City, which was my first duty station in Florida. And I spent that time, I think I early on read Rich Dad, Poor Dad, which is, the genesis of a lot of real estate investors. And from there, started researching real estate and found Bigger Pockets, read some of Brandon Turner's books, and was just ready to go. So as soon as we got to Panama City, like, didn't even have a place to live yet. We're living on base in the temporary housing. And me and my wife, I figured out the direct to seller thing, or at least like the presence of it, not really how to do it right. Cause I would just like I'd go to the base library and print off like 100 letters at a time. And then I'd, hand sign them all. And then my wife and I would split, like putting the stamps, writing the addresses, and send them out. And that's kind of how we got started in with the hurricane damaged homes. And, we had the VA loan. So we used that kind of all in conjunction at the beginning, just throwing stuff at the wall to see what stuck, and kind of found our niches through doing that.
So you guys were actually like putting out letters to just kind of homes that were damaged. You just driving for dollars, just driving around, finding the homes and
right. Yeah. Like when we got there, it was 9 months after a Category 5 hurricane. And this is already a lower income area. Like you think of South Florida, like very rich, a lot of money, nice areas. Like the panhandle of Florida is more like lower Alabama and more rural side of Florida, just with really nice coast and beaches. So they got hit really hard with that hurricane, and just really devastated the local area for a couple of years. And we got there kind of at the start of that whole thing. Like there were still down businesses, holes in roofs, trees over roads and over properties, a lot of vacant houses, busted out windows. I mean, just a lot of damage done by this hurricane. And, because of the presence of the base, like it's a very strategic base for our nation, just with like the flying mission they do there. They have open range out over the Gulf. So like that base wasn't going to go anywhere. And they're doing it's still in the middle of a $5 billion rebuild. And what that is doing is bringing in, at the time, and still is to this day, because it's, a multi-year project, but it brought in a lot of contractors, a lot of, economic development, a lot of home building. So the market started seeing a lot of appreciation, over the time that we're investing there. So when we got there, we were looking for just driving for dollars. We were driving the areas close to the base that, with my limited experience, I knew that, at the very least, military people would live there, decent areas close to the base, close to the shopping centers and stuff like that in town. And we would just write these down on the notes on my phone and go back and I'd, go onto the county website, find out the addresses and just put that stuff on a letter and send them out.
And you did it all manually. This isn't like skip tracing, using all the apps and all this stuff now. Like you literally on the website, handwriting.
No VAs doing the skip tracing. It was just all me. And completely manual, looking up property addresses, writing down, driving for dollars. Like didn't have Deal Machine then, or at least didn't know about it.
What's up, guys? It's Brody Fawcett. Hey, I just want to jump on here really quick and say thank you for tuning in and listening to the show week after week. It means so much to us. Real quick, if you are getting value out of this, please go ahead and leave us a review and feel free to share this with anyone who else you think might receive some value. And if you feel like you could benefit from working with us directly through a one-on-one coach like Joe or through our trainings and online program, head on over to realestateinvestingschool.com where you can schedule a free one-on-one strategy call and dive in to see if Real Estate Investing School will add some value for you.
And just straight sweat equity getting into these deals.
That's awesome, man. And it's like, so how does that work though? I mean, you're buying these, if they've had all this damage, were that not covered with insurance?
So because the whole area got hit by this hurricane, all the insurance, like there's a handful of the insurance companies in this area were just like insolvent. Like they couldn't pay all the damage at one time. So like still to this day, there's people waiting on the insurance. But I remember before I left, like I got out here to Utah in July of this year, but I was still looking for deals in Florida before I got here. And people were just now, getting insurance payouts from 3.5 years prior when the hurricane hit, or still kind of battling insurance. It was a really big problem. Insurance went into default, couldn't pay. And, now that's, experiencing secondhand effects with the higher insurance costs and premiums. And it's just, it was a whole thing. So I guess the short answer is no, like insurance did not come in all at one time. So there's a lot of opportunity for a lot of real estate investors. You hear about the storm chasers sometimes that'll go into these markets after hurricanes or after natural disasters or tornadoes or whatever and scoop up properties at a discount. But I think at my point in time, a lot of that had passed and there was just a lot of, value to be added and sellers to be helped as well, because they don't know all the stuff that, like us as real estate investors know about how creative finance and how, they can renovate their home and get the equity out of it. And for them, just selling, getting the cash that they couldn't get from insurance was a huge benefit to not have to deal with that headache and let somebody else, some young green behind the ears, 22-year-old to go jump into this huge rehab and try to figure it out.
That's awesome, man. Well, that's cool. So that kind of got you started. And obviously we went through, so many pieces already just in your bio, which I read. I'm like trying to think of like all the steps of where you've got into. I feel like it's been quite the journey. Was this part of the plan? Was it, or how did you grow as you went? Did you just pivoting along the way, or was this kind of like a preset, determined idea the whole time?
Oh man. Yeah. I think it's just a story of a series of pivots, which I think, is a common thread in a lot of entrepreneurs' journeys, or those, who are building their business and kind of rolling with what the economy, what the market gives them. And, at the time I was, marketing for these off-market properties. I had my VA loan, did that once. And then this year I was, wholesaling and, just trying to build up my own capital, and had my VA loan again after this year. So used that to jump into the next deal. And it was another house with a guest house, which has kind of been like a little sweet spot strategy for me. I'm living in one right now. It's a house with a guest house that we rent on Airbnb and pays the mortgage here.
Nice.
So that's always kind of been a backbone to what we've done on the short-term rental side. And I think, thinking back to the beginning, my whole plan was that, I know I had at least 5 years commitment in the Air Force. Now I got about 12 months left, but at the time I had about 5 years committed to the Air Force to be in this position. And I knew that, like, I was into real estate, got bit by the real estate bug, and wanted to build up my portfolio. My plan was that in that 5 year period, I wanted to be able to replace my W-2 income so that I could have that like financial security at that point to make the transition out of the Air Force if that's what I wanted to do, or if I had an assignment that I loved, I could stay in and still be building my wealth and have like the passive income side of things. And then that happened in a year, and I was like, man, I got to reevaluate my goals and what I'm actually working for. And I just loved it. Like, I loved what I was doing the whole time, working long days before work, going to work and coming home and working. But just really enjoyed the real estate side of it, putting deals together, finding deals, putting the pieces of, private capital and funding and all that kind of stuff to do the deal. And I was like, at that point, I was like, why am I thinking so small? Like, this is my 5 year plan. I just did it in a year. Let's think bigger. And that kind of transitioned me into commercial multifamily. This is kind of about the time COVID hit. I was sitting at home, doing a couple rehabs still, collecting the cash flow, and had this extra time. I was like, this is my time to actually dive into this and make something of it. And that's what kind of led to that apartment complex that we syndicated, and really still believe in commercial multifamily as an asset class. And I think the reason I pivoted away from it was just because cap rates got really compressed. There was all that stimulus money, like institutional investors and a lot of big money firms were chasing returns in commercial multifamily because it's kind of like a hedge against the unstable market. Mm-hmm. And I saw that as an opportunity again to pivot into something that I could get higher returns. That'd be, better leverage for my time and the capital that I could bring to deals. And that led into the, this multi-unit short-term rental boutique hotels and lodges that we're doing today.
Yeah, so let's talk about short-term rental a little bit, because one thing I hear from people is they'll be like, man, but short-term rentals, like, I don't want to deal with all that. Like, that seems like a job. You know what I mean? Like, I'm trying to get in real estate to not have a job. And like, how would you respond to that, or what has the experience been for you with running short-term rentals? I mean, is it a 9-to-5 job, or you're running all of this work, or have you been able to outsource it all?
Yeah, I think it's really a function of the systems you can put in place and like the team you can build around it, right? Like at a very base level, if, to do nothing, like if you did everything yourself, to have nothing outsourced, like you would be the one fixing everything. You would be the one doing the cleaning. You would be the one managing the guests and everything. So from a very, base level, I knew I couldn't do that because I was in the Air Force. My wife was getting her doctorate. Like we couldn't be that combo. And we tried it for a little bit. We've done all that stuff. We've cleaned the units. We've, messaged the guests. I've pulled out my tool bag to go fix stuff, but I knew that wasn't the best use for my time. So from a very early stage, like I just started outsourcing the things that I, manageably could from like a cost perspective and just a time and experience perspective. So like right away it was, all right, hire the cleaners. Right. And I had, at one point we had interviews for like 4 or 5 people in one night in our living rooms. Like, hey, I want to meet you in person. You're coming into our house and cleaning it in our guest unit in our house. Like, I want to make sure that I can trust you and get a good feel for you. And then, from there, finding the handyman, finding the landscaper, and just putting the pieces in place to where then it was just me, messaging the guests. And now we've scaled to where we've got a full team of 60 concierge members who are all in the Philippines, who have, extensive training and have their process to follow and do all the guest messaging. But I think, as a person trying to get to that point, or just trying to get into short-term rentals because of the higher cash flow, but to try to make it manageable, there's a few things that you can do and kind of start to lay out the roles that that need to be complete. Like it could be the cleaning, the handyman, the guest messaging, and kind of assign, a person a responsibility to that role. And at the beginning, it might be you, but try to then, outsource each part of those. And if you do that as you grow and scale, it becomes much more manageable than doing everything yourself until you burn out. And then you like have to put these people in place. You're going to be like one of those distressed sellers that's fire selling just to get out of it. Like you don't, like you're not, if you're listening to this podcast, like that's not you, right? You want to build this up, create the passive income and create the wealth that comes with real estate investing. So I think you have to be intentional about it up front. And, just, I guess to back up a little bit, like when we had 1 or 3 or 5 short-term rentals, we did a lot ourselves in terms of like the guest messaging, purchasing our own supplies and taking them to the different houses. And I still have, friends or people in my mastermind that are at that stage now, and it can be done pretty passively. And, I think the base things are like setting up like automated message templates or if you have a property management system or a PMS that has automated messaging baked into it, then like when somebody responds or when they book or when they make a reservation, whatever it is, those automated messages go out and it's less work on you. So there's a lot of things now that technology can help with that, a lot more platforms than when I started 4 years ago that are actually good now. And if you kind of start with those, like think with the end in mind and what you want, your lifestyle and your investment strategy to actually look like from a time perspective and a return perspective, you can absolutely get into short-term rentals and be relatively hands-off. But like, I think, I both know, like any way you cut it, it's going to be more hands-on. There's more things to manage. Like you have to be really intentional about the metrics you track, about the, just all the things that go into it to make sure you're curating a good guest experience. But that's more like headspace, high leverage time than you actually, going out and turning the unit. So it's a better use of your time, I think.
Yeah, man, that's I really like that. You have so much knowledge in the space there. And it's like, I guess the question I'd ask is there a point of like how many units that it starts to make sense to scale? You mentioned you were doing like people do 4 or 5 kind of on their own. Like, is there a point where it's like, can you outsource with only 1 or 2, or does it not really make sense at that point? You really need 5 or 6 before you start outsourcing. Like, what's the tiers there?
Yeah, that's a really good question. I think it, like not to take the scapegoat of it depends, but it kind of does, like depending on your strategy, depending on your market, your length of stay. Like if you're doing like more of a midterm rental where you have people coming in for the local hospital or nurses or corporate professionals, those are going to take a lot less management out of you. And there might not be a whole lot to outsource in that phase, especially when you have a few. But I think like always, like my first hire, and, I probably hired 4 or 5 until I found the right one, was just a VA that can help you with the admin items. And you can find these on Upwork or onlinejobs.ph or on Fiverr. And you can find people that are either like general admin assistants or that have specialties in whatever it might be, like social media marketing, guest messaging. There's a ton of people that we've hired that used to work for Airbnb and have been trained by them and know the platform really well, so that when you hire them, they already have like a baseline understanding. And these people can be hired from anywhere from like $4 to $5 to $6 per hour, which if they're working 10 or 20 hours a week for you is very manageable. I mean, if you have one short-term rental, say it's cash flowing, a couple hundred, maybe $1,000 a month, like you can afford that. It's just kind of like the mental hurdle of now you have somebody to lead and manage, but it also takes your time to focus on the higher value things that make a bigger impact for your business. And you can outsource those other things and have them, have the tactical work done without it taking up your headspace. So I think that's a really important part of it. So you can start, with a $5 VA from the beginning that messages guests, a couple hours a week maybe, and might help make sure that all the turns are, ascribed to a cleaner to make sure that, you're not getting double bookings, you're not missing turns, things like that. And that's where I started. And, kind of incorporated them into more and more. Then they were helping me, get all the documents to the bookkeeper in there. So it just scales kind of as you go. So I think that's a really important one. But if you want to talk about, having a team or more of a high leverage position, you might need 3 to 5 short-term rentals to actually, start to build that back end infrastructure to actually help with the operations. And then certainly like when you get to around, the 8 or 10 level, you at that point, unless you're just buying really thin margin deals, like you should have the, the top line revenue to be able to divert, a couple $100, maybe $1,000 a month towards that kind of administrative help that eases the burden on you to manage everything. And then you can, focus your time on, making sure your business is actually running smoothly, finding new deals, increasing the profit, doing pricing strategies, things like that.
So I've seen a lot of success with people I've talked to that it seems like when you kind of bundle where you buy, as opposed to having like one short-term rental here and one all over there, it's like you'll have like 5 or 10 in one location. It sounds like that's something that you've done and had.
Yeah, that's a really good point. And all that, the things that I was just talking about building up to that level of that number of units, really it's a number of revenue, right? Because you could have one unit that just kills it, that could provide that revenue you need to outsource, and like different asset classes will have higher margins, so you need less of those properties. So it's a revenue number, but it's really hard to meet that and meet kind of like this base economy of scale where you can really have a team in place in that location that manages everything. And kind of for us, like we found that in our markets, it's somewhere in like the 20 to 30 unit range of where we can have an on-site property manager.
Right.
We can have,
then you have that cleaner that you hire doing all of your units, and that handyman doing all of your units, because
right. Yeah. And then once you get to that
interview
scale,
those guys and find the right ones. And
yeah,
but if you only have to do it once for all of your units, that seems like a lot better than trying to do it all over the place.
Yeah. So that's where it starts to get much more efficient and, on a much more manageable scale, because as we're building our business, like we started with our 2 hotels in Panama City Beach, Florida, plus all my rentals there. And then we had one in South Lake Tahoe, and we could see the difference. Like we had the 2 hotels plus the houses. So that team, they managed the houses, they managed the hotels. And, we had the revenue to cover, all of the payroll expenses, to have those people there doing the things that like my partner and I just couldn't do. We didn't have the time to do. We've still got our full-time jobs. Like a lot of people that start investing in real estate have full-time jobs and are using real estate to get out of that job. It's like you need those people in place to do that and to really grow and scale. But then in Tahoe, we had the 14 units and we weren't quite at that level. Like we didn't really have the revenue to hire the property level team there until we got our second property, which was 20 units. So that put us at 34. And then we had, the margin that we needed to have our property manager, assistant property manager, our maintenance guy, and all of our cleaners. Plus the overhead went towards our back end team, hiring an additional e-concierge member, promoting one of them to a manager that kind of oversees that team. And now we're really, running at a smooth operational pace. Whereas before you get up to that level, it can be more hands-on and, you doing more of the things or just wearing more of the hats.
Yeah, that makes a lot of sense to me, because I feel like, what would you say like to somebody who's like, is it worth owning 2 or 3 short-term rentals, or is it really only make sense if you're going to like actually be able to grow it enough to be able to outsource a lot of it? Because you never use like a property manager, right? Because a lot of these property managers are taking 25, 35% for short-term rentals.
Yeah, and that's exactly why we kind of developed into having our own, like a whole separate entity, which we have PropCo and OpCo. The OpCo is essentially, the operating company, the property management company that runs everything. And that really was built out of necessity because we knew that another property management company wouldn't have, the infrastructure and the know-how to manage all that we have and really do it to the quality and maximize the profit potential there. But I think to go to your question, property management is super expensive. But if you have if you're in the 1 to 3 range and you have the revenue to be able to cover that and still have profit, and do better than you would as a long-term rental, like it can definitely be justified there. But I think like it's so in that 1 to 3 range, it's still so easy to, I say easy, it's got its own set of problems, but easier to wear all those hats and actually you get a better understanding, of your business, how the pieces work together, and can really affect the change to maximize your potential. Because if you pull in a property management company, they might have 50, 70, 100 other units that they're managing. They're using all the same pricing strategies. They're using all the same recommendations, and you're not really getting a differentiated product. And I think in today's market, the Airbnb rentals and short-term rentals have become so commoditized because there's so many operators out there like that think it's, easy to just furnish a place, put some cool art up on the wall, throw some cool throw pillows, and, run this you run the short-term rental and it be as profitable as it was 2 to 3 years ago. But the number of listings has gone up so much that you really, I think, need more control, and you need to have a differentiator, and you're not really going to get that with the property management. Now you can set it up on the front end, but I think, like, again, it just kind of tails off over time. But in the 1 to 3 range, I think you can absolutely like still be profitable, still put in systems that makes it really manageable to, do whatever it is in your life, still go to work, still go on vacation, not have to be pulled into the business all the time. And you put a few of those things in place, like have a really good cleaner that has a little bit more responsibility, does, maybe you pay her just a little bit more. And we pay all of ours hourly now because we're kind of at that scale. And that's another perk of going to scale. But if you find this cleaner that, can not only clean the unit, but can, maybe purchase supplies for you, can maybe let you know when something's broken, or they just call the handyman themselves to get it taken care of, then that takes you out of it even more. And there's less things you have to do. And I know like a handful of people, they might have, 4 to 5 or 6 short-term rentals that perform really well. And, they're like, that's their full-time income. They're out of their jobs now and they can travel, do whatever, got kids, and spend time with family. So that, I think that 1 to 3 range is where you really like, sharpen your axe to be able to scale to that next level where you really get that financial freedom. But it takes going through that phase of kind of like learning how to put all those pieces in place to get to the next level.
I love that. I kind of suggest that to a lot of people when they're first getting into real estate. It's like, do the dirty work yourself so that you know how to manage the people that are going to do it eventually, whether it's like say physically, getting in there and changing this or like fixing that up. And like a lot of times you got to do the dirty work at the beginning so that you understand the ins and the outs.
Yeah. I always recommend that too, especially with like short-term rental property management, because there's so many nuances, like your location, your property type, and a few different things like your pricing strategy are really going to dictate like the type of guest you get. And the more you figure out how those inputs like affect your outputs of, how you're financially performing, how the workload is with the guests you're actually getting, because like a certain kind of guest will absolutely, be more of a headache and be harder to manage and create more work for you. But if you set your business, you set your, your rental and your unit up in a certain way, like you can get the best, you can get the best guests and, make it more manageable on you. And that's things like you just don't understand that dynamic if you just hand it over to property management. If you do, that's fine. Like if you want to go completely passive, like you can still do that with short-term rentals, but we're kind of like talking about like putting those systems in place, and getting to that place where you have control kind of over your, like in a weird way, like your financial destiny. Right.
Yeah.
So yeah, I think it's a great tip. And I tell people that all the time too.
Yeah, it's almost like there's a disconnect if you don't. And it's like, it doesn't need to last forever, but just it's part of the tuition. Like go through it so that you get it. But man, you're doing more than just, renting out a house. Like you're running hotels. I mean, you're running multi-unit hotels. I like that niche of going in, taking these rundown motels and totally renovating them to these like really cool, unique, original boutique like hotels. How's that been running like a whole hotel as opposed to like an Airbnb? Is it pretty similar and just like, just kind of same systems, just easier to scale it?
I think there's definitely similarities, but there's also like, there's also nuance to it as well. Like you got to think about when you have, a bunch of rooms, we have anywhere from 8 to 20 units in one location. So when you have 20 units that are all, beside each other, we've got one that's 2 stories. So you got them on top and bottom of each other. You kind of got to think about like the guest experience and how they go through, having people beside them. It's not quite, it's private. It's a private space, their own entrance, their own complete unit. And, but there's also going to be other guests on site. So you really have to be intentional with like your guest communication up front with your listing, and really just over explain, because guests don't always take the cue from you. And they don't always look at all the pictures, and they don't always read everything. So we put, a couple of different things and really explain out in our listing. We explain out in the automated messaging, we explain out on our websites so that they know what they're coming into. And I think like the key here is to set your expectations, like for good or bad, whatever it may be. And I think we have awesome properties and they're not bad, but like it just properly sets the expectation that like, hey, you might hear noise, and we provide, earplugs at all our places because of that, to try to, provide something in places, at least show them that we care if they don't use them or not, but the systems are the biggest part. And I think those are essentially the same. And like the cool part about it is those scale out. So like the things you do for one unit are the same you do for two on a bigger level. But when you put systems around that, it makes it a little bit easier, right? It could be your guest communication. It can be your guest like refunds and resolutions. And when you have systems in place for that and you have a bunch of units, they all kind of fall under that same fold. So it takes out a lot of guesswork from you. I think because we have, different kind of properties in different locations now, if they're all different houses, like I could see the difficulty in, having this house with this set of amenities with, this rule book, this local codes and ordinances. And, you've got to, I don't know, go check in with a caretaker and do all this. And it's completely separate for a different house and completely separate for a different house. Yeah. So it allows you to kind of systematize each property under like a bigger umbrella of an operational fold of how you actually run your business, your underlying principles of how you process certain things, whether it be, refunds or, whether it be your transient occupancy taxes, based on your location. So it allows you to build up a lot of redundancy and then outsource those kind of mundane, repeatable tasks that you would, have to do separately in a lot of cases if you had a bunch of different kind of properties all over the place.
So where did you get this this business mindset? As you're talking about running all this, like you're not passively owning some investments. Like you've built a business. You understand it. Like especially right. Short-term rentals, like it is its own industry of business. Right. Have you always had that kind of business mindset, or did you just learn it along the way? Like what would you say?
Yeah, I think it's really developed over the last, 2 to 3. I mean, really been in short-term rentals for the last like 4+ years, but have and I've been through every stage of it now. Right. I mean, I think the next stage would, to get like a 100+ unit boutique hotel, like on a lake, on a mountain somewhere that like floats up into space every 12 hours. But, I think like it's come from just like going through each phase and like I've just always been, like self-reflective of like the things I've been through. And like, I don't like making the same mistake twice. I don't, always avoid the second time, but if I reach a bottleneck, like that's where I want to put in a process or a system so that doesn't become a bottleneck in the future. Like I don't want that one thing to limit my growth or like pull me away from, what I'm actually focused on at this point anymore. I want that to be something that can be, handled with something in place, a team member, a process that we can go to when that thing arises. And I think one of, at some point I read the book Traction, and we run our business on EOS. So I think that compartmentalizes the different, I saw you looking for it on your
phone. Yeah, I was like, I have that right here.
Yeah, kind of use that as like a manual. I refer to it, I don't know, maybe once every couple of weeks and just like reread a section of something I'm kind of going through. And I think it allows you to kind of compartmentalize different areas of the business, whether it be marketing, whether it be your revenue management, which involves like your pricing strategy and discounts and different things like that, your HR systems, and pull those back into, like understandable pieces so that like, hey, we run this function of our business this way. And what that allows us to do is save all this time, run more efficiently. Like employees know what to do. We have these different documents that we run our business on, and the employees know where to go find that. Like if it's a question about a property, our e-concierge member knows where to go find that. They'll look it up and give the response. So it's just like been a series of like getting through like each bottleneck phase, learning the lesson, and just continuing to, add new pieces of, I don't know, like optimizing behavior kind of at each level.
Yeah. And it's the funniest thing. I think one of the key attributes of successful entrepreneurs or business people and everything is just the confidence and knowledge or belief or whatever you want to call it, that like you can figure it out, so you get to this stage and you just figure it out. And like you say, you remove that bottleneck. I really like how you describe that. And it's like, okay, now we'll just go as far as we understand. Like we don't know what's going to stop us. But then when we hit that wall, you figure it out and you create a system to overcome it. And like that concept, so many people are afraid like, oh, well, I don't know how to run a short-term rental business. I don't know how to flip a motel. I don't know how to, buy a 66 unit. And it's like, dude, Blake didn't either 6 years ago. You know
Right.
what I mean? Like you probably had no
Yeah. And I
clue
think
how to
that's
do any of that.
like such an important thing of just, real estate, short-term rentals, like business in general. Like you learn what you need to at that stage and then continue like building that bridge until you like reach that crossroads. But the whole time, like, I just always kind of like tried to absorb the information and the resources about that thing I'm going through and really like learn it and then build a system around it. And then I can move forward. Like I'll give an example about one of the things that we've done in our business as hiring. So South Lake Tahoe and Panama City Beach, where we have our properties at, are, destination vacation rental markets. So, the local population isn't as big as like the influx is what we see every year. So they've got tougher rental markets. They're also, kind of more rural, like further away from bigger metro areas. And especially like South Lake Tahoe, it's a mountain town.
Sure.
So it's really hard to hire there. And we had a lot of trouble getting the right, the right candidates, hiring the right people, had a lot of turnover. And I think I'm counting in my head. I think we had 5 different property managers in like 6 months, or maybe less, 5 different property managers in 5 months. And it was just like a constant headache. It's like we could never get past this problem. And luckily we've had an awesome girl now for 11 months going on a full year with us. And she's awesome. And it took, learning the things that we had to learn. But I read this book, the book on hiring, and got really intentional about our, like job postings to make sure that we're in the first place attracting the right people, and then our screening questions and our interviews to whittle through to really get the right people. And then our, they call it the who interviews, when you take like your top 2 to 3 candidates and then really narrow down on the one you want to hire. And then from there, you've got to do your onboarding process to make sure that they know everything that they need to be doing, that they really understand their job, that they understand what their goals are, that they understand what the company does and is, and stands for, and the core values and all that kind of stuff. And then just the ongoing training. So it's like this whole, system and process flow that took, probably 4 or 6 weeks of just like doing that thing. And then once we got through that, like the next time we had to hire is much easier because we had it all documented. We had all the things in place. We had all the screening interviews. We had the job posting templates to get out there. And it was just repeating that system. And I'm not going to say like, hiring in South Lake Tahoe became the easiest thing ever overnight. Like there's still kind of issues underlying, but now we know how to deal with it. And like, we know the levers to pull to get better candidates. And like, that's just one example of like the many of like when we hit that bottleneck or when we run into that crossroads, like what can we do? What can we learn as like the owners of the business to fix this thing, make our business better, increase our profitability, decrease the headaches and all those different things.
And I love so much the concept of like, I can put in work now and it'll forever return by making life easier, right? Like that principle is, what attracted me to real estate at all. It's like, oh, I'll do all this work to get this asset stabilized and secured and rented or whatever.
Build your portfolio and then collect the cash.
No matter how much time or effort you put into it, right? I put like sleepless nights and just crazy. It's not sustainable, right? You're like, but once it's up and running, like it'll pay me forever. And even with the systems in your business, like I said, it's like, dude, that sucks at first. It's like this huge headache. You're like, I don't want to be doing this with my day every single day, but it's not every single day. Eventually you get it figured out. And then next time it only takes a fraction of the amount of energy.
Yeah. And that's always like the pushback I hear when I, talk about this kind of stuff or whatever. It's that it takes too much time on the front end to actually do it, but you don't think about like all the time you're going to save on the back end. And that's what you're going for, right? Like you might spend, I don't know, call it 20 hours to build this hiring system, but then you save, 4 hours for every like hiring tranche you do. And if you're doing that once every couple months, that payback is infinite after like month 2 of building the system. So don't think about like the hurdle you've got to jump to get there. Think about how, smooth the rest of that process is going to be for you, and save all that time. I mean, it's such an impact on not just like the efficiency of the business, but like the clarity and the quality you have in your own life and being able to manage it. Like it makes all the difference.
Yeah. Well, and that's the heart of real estate to me. And owning assets, that's the difference between an active income and owning an asset is you don't have to keep jumping the hurdles. I think of like a hurdle race. And it's like, imagine if you could have a choice, like, hey, your first hurdle is 15 feet high. And you literally have to like climb over this thing and then climb down it. But then there's no more hurdles. There's no more hurdles the entire race. And it's like, Okay.
You just gotta learn how to climb really fast, and then you out climb everybody, and you're running easy after that. But yeah, I think that is I mean, that's one of the biggest keys. And like, I think what leads us oftentimes to real estate is that promise of passive income, right? Like, you don't have to work for your money. You buy the asset and then it just pays you in mailbox money and all that kind of stuff. But there's such a gap there about the things you actually have to do up front when you buy that. I mean, when you buy that property, it could be the renovation, it could be like the tenant placement, it could be, the hiring the team, whatever it is. But then it becomes passive. Like it does. Like it takes me 4 to 5, maybe 6 hours a week to like actively manage the business. And then, there's other like research and optimization, tasks I do on top of that, because I'm trying to make things better and grow and all that kind of stuff. But like the active management takes a couple hours a week. And that's with, like 85 units and over 2.5 million of revenue that we bring in. It doesn't take that much time when you actually build the systems, and then you can have that base layer, that baseline to build on top of, right? Like build a really strong foundation, then you can build anything you want on top of it.
Yeah, I love that. That's awesome, man. Well, I know we don't have all day, but maybe we could just touch a little bit on the one, just running your adventure stays, if there's any more assets or aspects to the company of adventure stays that we haven't really touched on. Is there any other parts that we haven't really mentioned of the company you run?
I mean, we could talk about like the positions or the functions we have in the business. One of the biggest kind of separators for our business, and you can do this in different kind of real estate businesses when you operate yourself. So like I like to think of myself as like the real estate investor, yes, but like the operator. Like I know what goes on in our business, like I know our niche and all that kind of stuff, and don't just invest passively. So like how we've set ours up is we have our propcos, our property companies that are our LLCs that have our ownership interest in the actual real estate. And then we have the opco, which is the operating company or the property management company that manages all of our real estate. So there we have, basically money collected into the opco account, paid out to the propco account, which pays out us and our investors. And then we also own, a share of the opco as well. So we get paid from there. So we have 2 different sources of income, and also 2, value drivers. As the operating company gets more valuable, has, more top line revenue, increases its EBITDA, it becomes more value, because as a property management company, as an operating company, it's valued as on like a multiple of its EBITDA, or its earnings before interest, taxes, and depreciation. Then obviously our real estate, it's commercial real estate, so it's valued on the performance of the asset, or the NOI. So we got 2 different value drivers there. And then kind of like underlying in the business, we have our revenue manager. We have our back-end operations manager, a director of operations who manages the day-to-day and all the different divisions, guest experience manager who's domestic and manages our team of Filipino VAs that do all the guest messaging and the refund requests and the resolutions and all that kind of stuff. And then we have our property level staff of our cleaners, our property managers, assistant property managers, and maintenance. And then we've got a listing manager. Missed out on the first time, that does all our updates, creates new listings, different stuff like that. So, and these are all like functions essentially that I kind of did at one time. And like we talked about, like met a bottleneck, and then, outsourced. Like for the longest time, I did all of our revenue management. And I just sat down for like a week and just went savant mode and typed up, this big revenue management document with hyperlinks to videos, kind of walking through our calendar and showing these different things, the strategies about it, and then trained that person, our revenue manager, on that, and met with her weekly. And then it became like a half hour to 1 hour management meeting for me to kind of check her work, give her more insight and stuff like that after she was trained, and just took each one of those positions and kind of outsource it to make it more scalable.
And you built all this out in just the past how many years?
We started in June of 21 with adventure stays. So what's that, like 18 months, 20 months?
That's crazy. Like, I think somebody listening to this, like, oh, well, yeah, sounds like you've been doing this, decades. It's like, dude, you built this in just a couple of years, not even 2 years, Yep. And it's like, that's pretty inspiring. Like that, even just being able to replace your W-2 within the first year, like a lot of people, like it's like a lifetime goal. You know what I mean? It's like you're able to pull that off so fast. What would you attribute your quick success in, from the level one up to everything you've been talking about, like so fast?
Yeah, that's a good question. I think, man, it really comes down to just like the speed of action. Like in business, I think speed is very forgiving. Like, because if you succeed, that's great. Like, you just compounded your success because you're chasing the next thing. But if you fail, it's also a really good opportunity because you take that as a learning lesson and you figure out what didn't work and you're able to pivot. As long as you don't give up, like, you never really fail. So by going really fast, you flatten your curve. And, I think there's a really fine line between being like overly aggressive and also like being like conservative in nature of not wanting to get into a real estate investment and lose your shirt, right? Like, you want to make it profitable for you, for your investors, if you're raising money, but you also have to go, fast, whether it's like chasing a deal, because in this competitive market, like, if you're not pursuing a deal with, some intention, somebody else is going to get that deal.
Yeah.
And, the same thing with hires. Like, when you find a good candidate, you gotta pull them in quick because somebody else is going to hire them. And I think that's everything around what I've done is just like try to go fast and stay a little bit uncomfortable, be reflective in the lessons learned and the failures that I've had to take that into the next success.
Yeah. I mean, and just for those listening, and I know we didn't dive into, we've been talking more about your short-term rentals and your systems. Like, the way you funded a lot of this was through the BRRRR strategy, right? Like, you didn't just have millions of dollars, you're active military. You're not just inheriting millions of dollars to throw at this. You funded most of it through buying and rehabbing and refinancing. Is that right?
Right. Yeah. I mean, when we started, like, me and my wife, neither one of us came from money. And I think when we bought our first house with a 0 down VA loan, like paying closing costs, I don't think we could have even covered all that. So we negotiated in like seller paid closing costs so that we didn't have to, go into the hole. So we started with, $2,500, not that much money. And from there, just built up our cash, like, over time. Like, we would just save everything we made. We actually cash flowed on our first deal like $100 a month. So that just went into the account and I was just watching it go up $100 every month. I was like, we're rich, baby. We're doing it. And got into wholesaling. I think I did like 3 or 4 wholesales and a whole tail. So it allowed me to build up a little cash, and then was doing the BRRRR strategy and would just, roll everything back in. And then when I got to the limit of like my own personal funding, I was doing creative finance with the early deals I did, and just like figuring out how to put the pieces together and like building my confidence. And that translated into, bringing deals and the experience I had to be able to raise money and bring in investors to my deals. So when I kind of met the natural limit of what you can do or what I could do with my own money, started, getting good at raising money, or getting decent. Like, I want to call myself a great capital raiser by any means, but had some success at it, syndicated the apartment complex, raised some money for the boutique hotels and other deals I've done. And I think that's one of the things the thing that's always going to be your limiting factor. Like, Brandon Turner told me this at the Maui Mastermind. He's like, if you don't have, like, you could be able to, find great deals. You could be able to pull all the different levers in the different areas of your business. But if you don't have the money to close the deal or grow your business, like, that's going to be your, kind of ultimate stopper. So you need to have focus on that. And that's kind of what got me able to scale up.
Man, there's so many things I want. We could do like 5 different podcasts just with you. But let's, before we end out though, let's talk just a little bit on that. So raising money because like I said, a lot is obviously an issue. I think a lot of people think about, it's like, oh, well, I don't have any money, and so people started learning about the BRRRR strategy. So if they have a little bit, they can go recycle it basically and do it over and over, But talk about that, because that is a bottleneck. That is a lid that stops a lot of people at every stage in their investment. Those even who own like lots of property, they hit a wall. They're like, dang, like, how do I buy more? Tell us a little bit about how you've raised money and how that's been such a win-win for you and those that you brought in, and how you view that going forward.
Yeah. I think raising capital from private investors is such a relational thing. Like, for people to invest money with you, they have to know you, they have to like you, and they have to trust you. So those are like the 3 areas that, if you're looking to raise money, that you could focus on. And like the easiest one, or maybe not the easiest, but the most apparent, is like, how do I get more people to know me? Just because, like, the law of large numbers, the more people I know and ask to invest with me, the more people will invest with me. Sure. But to do that, you've got to get them to like you. Like nobody's going to invest money with you if they think you're like a dirtbag and just, not doing the right things. Like hold yourself with credibility, have integrity, that kind of stuff. You probably shouldn't be raising money if you're not anyway. And then you got to be trustworthy. So you got to get people to know, like, and trust you. And that's all based on your relationship with people. And that could be, your relationship and your perception, like how you put yourself out on social media, right? And I don't suggest you just go like, hey, I'm raising money, invest in my deals. But like share your deals, share your successes, share your progress, share your journey, right? Because if you're already investing in real estate, you're doing something that a lot of people aren't doing. And a lot of people with capital aren't doing, but want to, because they might be high income earners, making a lot in their job, stuck in the job, whatever it is, or maybe got inheritance, whatever that situation for them might be. They're not the one chasing down the deals, but they want to invest in real estate. So if you can connect with those people, it could be on social media, it could be your local real estate meetup. I thought about joining a country club, but I never did that one. But hosted a real estate meetup for 2 years and got a lot of investors there, found partners there, found deals there. Like the more you can get around people with that like mindset and just make yourself known, liked, and trusted, you'll have those opportunities. And then of course, eventually you've got to actually put the deal together and have the confidence to either pick up the phone, meet in person, meet for coffee, and share that opportunity. And something I always like to do on this is, ask somebody if they know anybody that wants to invest with you, like share that opportunity. Like, hey, I got this great deal. Do you have anybody that would want to invest in this? And I've asked that question and people say, yeah, me. And it kind of takes the load off of asking them directly and kind of defers like, oh yeah, my Uncle Jim might, or whatever. If you're kind of that more deferential person.
When you're happy either way, right? If they're not interested, but they have like,
exactly.
Uncle Jim and Aunt Sally do, it's like, great, And if they are, then they can volunteer themselves. It's like, it's a win-win for you.
Yeah, exactly. But it's just all about relationships, man. You got to put yourself out there. You've got to, be vulnerable at times, and you've just got to make the effort to put yourself in the position to provide a good opportunity for somebody. Like first you got to have, like, you're not going to raise money for a bad deal, or shouldn't anyway. You've also got to have some kind of experience, some kind of drive, some kind of hustle. Like if you're not doing anything, if you don't know what you're actually raising money for and have confidence in yourself to actually do the deal, like you shouldn't be raising money. I see people, doing that on social media. I know some of those people, you probably do too. And it's like, probably need to back up and learn what you're doing a little bit more before you actually go ask somebody for their money. But yeah, know what you're doing, know your strategy, and just make the relationships.
No, experience isn't required in the social media world anymore. Everybody's a coach and a mentor
that's true.
The expert.
Kylie Jenner, everybody's an influencer now. So
right. So let me ask you this: do you find the deal first, or do you find the money first? I know it's a loaded question,
chicken and the egg problem. I'm a deal guy. I think if you find the deal, you will find the money. Like I've always had success by going out, putting in the work, putting in the hustle, finding the deal, and then not like the money just gravitates towards you, but like the gap between finding the deal and finding the money is just simply telling people what you have and what you're looking for. So if you've got a really good deal, like go to your real estate meetup, like get on, depending on, SEC rules, if you're, raising money for commercial real estate, that could be offering a security. You don't want to get into that realm. But if you got a single family house and are just looking for a private investor to partner with you on it, probably not a big deal, but I guess talk to your attorney if you think that's a line you don't want to cross. But you basically, I always think the deal. So that's where I come from on it, is if you find a deal, you can find money. But also, like if you are, I don't know, the more cautious type that wants to build out an email system and, talk to a bunch of people and go out and raise the money first, you can absolutely do that and, raise a fund or something like that and go out and look for deals. But, I don't know. I just like the pursuit of the deal.
Yeah. And it sounds like, obviously there's no right answer, right? It can work however, I'd like to hear how you do it. And, it sounds like your strategy though is to be out there, be networking, be seen, like you said. And then when you find the deal, there's people that to reach out to,
Yeah. And I think even when you don't have the deal yet, like let people know what you're looking for. Like let them know like your track record, what your past record is and your credibility. Say, hey, I'm looking for more deals like this. We had a 30% return on this deal. We refinanced, got our money back in 12 months. We're looking for another deal. And they're like, oh shoot, man, that's a great returns. If you find one, let me know. Raise money that way is just like, priming the pump of having those conversations beforehand. And you as a real estate investor, you should especially as you get to the next level, you should always kind of be raising money, right? You always want to be like building your investor list, building your network, opening up that door for opportunities. And then when you find the deal, bang, like it's, like the fish hits the hook and you're ready to go.
Well, and I love it because it's such a win-win. You know what I mean? It's like whoever's investing, they're super passive, and they just get to benefit off of all the time and effort and knowledge and all those hurdles, those giant 15-foot hurdles we talk about. You've done all that work, and they just get to like come in and ride your coattails, and they get to facilitate the whole process so you can keep going. So it's such a win-win.
Yeah, I mean it's such a mutual relationship because like I was saying, there's a whole demographic of people that have money that want to get invested in real estate but don't have the time, don't have the experience or the knowledge. And if you are that person with the time, experience, and knowledge, then I mean that's a perfect mesh. And what I did when I first started was like I found the deal, the other person brought the money, we split the proceeds. Like that's a great way to get started. Like you don't have to go raise $1 million to do a single family house and get your, track record started. If you find a really good deal, you bring the contractors, you close it, like all that kind of stuff, and you just need the money partner. I mean, you're in the money, pun intended. Go make it happen.
Love it, man. Well, we'll kind of end out here, go through our final 4 questions and everything like that. Is there any last bits of information you want to make sure the world has heard from you? I guess that'll be part of our questions. But
oh man, put me on the spot here.
Any things I should have asked you I haven't asked you yet?
No, nothing that you haven't asked. I would just say like before we get into this last section, I'll leave everybody with like, just, go get after it. The action is the most important thing. Like, I guess I've been fortunate by not failing too bad so far, but like, there's going to be failures along your journey, and don't let the fear of failure stop you. Like I think about, like I was teaching my wife to ski the other day, and, she wasn't one to point her skis downhill. And I was like, the worst thing you do is fall. Then you get up, you get back up and keep going. And I think the same is true for real estate investing, building your wealth, building your business, whatever it is. Like you have to go take the action and focus on the speed and the velocity of turning your money into more money. And I think you'll be pretty pleased with where you end up at the end of that.
I love that. There's this concept I read in a book once, and maybe it was in a movie. They talk about getting hit, like getting punched in the face, right? They're like, once you get hit once and you realize you're not made of glass, like everything changes, and that's what I think. You're like, yeah, so you fall and you didn't break, like it's okay. And you can then you can actually have the confidence to keep going.
Exactly.
All right. Love it, man. Well, we'll dive into our final 4 questions here. All right, Blake, number 1, what is a non-real estate related bucket list item you've recently checked off or are excited to check off next?
So at the end of November, early December, I went to Central America for the first time, and I hiked an active volcano at night and watched it erupt. And
nice. Were you down in Guatemala?
Yeah, I was in Guatemala. That was a pretty sick trip.
Cool. My buddy, I have a friend that literally just got back yesterday and was telling me about that, and they got stuck up there at night in these like windstorms, and they like almost died.
Yeah, I mean, you're up there in the clouds because like these volcanoes. We're in Antigua, and there's just these 3 big volcanoes like around the outskirts of the city, and they're just like from a distance, they're just like big triangles. It's like, how did that thing even get there? And we hiked it, and we got up there at like 7 p.m. It probably gets dark around 8 p.m. And then we had to make the climb down the slope and then back up to get to the other volcano and watch this thing from like, I'm not even exaggerating, probably 150, 200 yards away from like the mouth of the volcano. And like you could feel it erupting underneath you, and you just see it spew into the air. And like you're at a safe distance because it kind of blows the other way. But just an unreal day, an unreal experience. A very cool group of people that I was fortunate to go with. And yeah, good bucket list.
That's cool. I like that. I need to.
So you guys haven't been to Guatemala. It is amazing.
I know. It's funny. It's like you see something in one place, and I feel like I've just seen this exact same thing like in 5 different places. I'm like,
dude, the stars are lining up, man. You got to get your ticket.
I need to go, dude. All right. Number 2, what book are you currently reading?
So I'm reading 2, and I kind of usually do this, but I've got one paperback that's up on my shelf and one on Audible. And the paperback is 30-Day Stay by my friend Sarah Weaver, who actually put on that Guatemala trip, and her co-author is Ziona. And that book's pretty good. It's like 30 days and more for short-term rentals, or I guess medium-term rentals. But just reading that to kind of add another tool to the tool belt, and pretty well written. And reading Becoming Trader Joe, which is like the story of the entrepreneur who built Trader Joe's, the grocery
Yeah.
chain, and reading that one on Audible, like while I drive and work out and stuff, and enjoying both of them.
Love it. All right. So what content, podcast, course, YouTube channel, et cetera, any source of whatever kind of content comes to your mind, what's something you would recommend people diving into or checking out?
Yeah, I think for a book to get started, a really tactical piece of information is a book by Brandon Turner that I read really early on and was a huge help for me. It's the book on investing in real estate with low and no money down, super long title. But just an awesome book. You learned about wholesaling and seller financing and lease options and, partnering and raising capital and all those different things that you really need is like all the different puzzle pieces you have to kind of create what that deal actually looks like. And because of that book, I used 3 different creative strategies or 4 different strategies for my first 4 deals. So I did a 0 down VA loan. I did a seller finance deal. I did a lease option deal, and I partnered on a flip. So I used like all these different things because of that book. Like I knew they were out there, and then I just had to like figure out the contracts and put it all together. And that was a really good one for me. And I think that would help a ton of people, especially those just starting out. And I think if you're flipping or wholesaling, 7-figure flipping is a good like online education and group and stuff that I've been a part of, went to the events and get a ton of value from. And if you're into short-term rentals, I got a YouTube channel, shameless plug, and lay down some stuff on there.
Now, what's your YouTube channel?
It's just my name, at Blake Dailey.
And that's Dailey, right?
Yep.
Blake Dailey. Check out the
Not
YouTube.
like the word.
Not like the word. And it's that's the same for your Instagram. If people want to follow you on Instagram and reach out to you.
Instagram is Blake J Dailey because Blake Dailey was already taken. They had like 2 posts from like 6 years ago and 2 followers, and can't get my name on there. But
just like messing this guy, hey, can I just like take you to
I think I messaged him
dinner to cancel your Instagram?
Yeah, I messaged him for about like I think I was on like a monthly cadence. Like I'd message him once a month, and I did that for about a year. Out of my just belief in the follow-up from like real estate deals. So I've got a lot of deals from just like following up with sellers, and they never budge. Probably because they had 2 followers and 6 posts. Like
he
2
doesn't
posts
even know his login
6 years
dude.
ago. Yeah, they don't even know
he
their
hasn't
login
logged
anymore.
into that thing ever.
Yeah.
Oh, someday they'll delete the account and it'll free up and it'll be yours.
I know. Man, I should set like an alert on that or something.
Right. All right, last question, Blake. This has been a treat. So much to learn. Like say, I'm glad you do have your podcast and your Instagram. I do recommend people to follow up on that because obviously we didn't get to a ton of things I wanted to pick your brain about, but they can find you directly and see the content that you're putting out there. But all right, last question. You pull out your phone, you write a text. Everybody's phone in the world just vibrates. They look down. What's it gonna say?
Ooh, I was thinking hard about this. I wrote down like a little idea about it, but the opener would be dream big and act. Like I think anybody, anywhere in the world, real estate investing, business owner or not, like what got me into this was like a dream for more in my life, and real estate just happened to be like that avenue. And then the other part of that is act. You got to take the action. Like too many people either don't have like goals that they're working towards, or they don't have a dream that they're chasing. And I think you need that to have the passion, to have the drive, to keep working towards whatever it is you're going towards. Like you need something to fuel you because there's down days, there's bad stuff that happens in the meantime. You got to have something to keep you going. And there's always, something in the way. There's always an excuse, but if you dream big and act, you'll overcome it and get through that stuff and achieve what you want at the end of it.
I love it, man. I love it. Well, sweet. Well, hopefully everybody reaches out to you if they need to invest in. You have any syndications or anything?
Please do. Everybody listening, hit me up on Instagram. Would be happy to help or provide any feedback or value that I can. You guys.
What's your next big project you're ready to tackle or do next?
Oh man, I got my eye on one. I got to figure out how to raise a little bit more money before I take it down. But I think the general, direction that I'm heading is more unique spaces, more, properties and units that just really stick out. Like when you see that listing photo, you're like, boom, I got to book that thing, because I think Airbnb bust was a big controversy over this low season. And the fact is, like, Airbnb does like shadow list certain listings in the low season because they have way more supply than they have demand for those periods of time. So if you're not one of the best, or if if you're not hitting certain marks that platform wants to see, whatever the algorithm is saying, like, you are not going to get shown in search, you're not going to be seen, you're not going to get booked, you're not going to make money. So it's just like a vicious cycle. But if you like focus on the virtuous cycle of, have a really unique property that stands out, then you get more views, you get more clicks, you get more bookings, you get more and you get more money. So you want to put the virtuous cycle in your favor. And I think looking for more really cool places, like maybe some tiny homes or tree houses, or just cabins up here in Utah or wherever, like Yellowstone's not too far away. Like, so many national parks out here that, have the demand. Then you just got to provide the product that people really want and will pay the highest price for. So that's what I'm looking forward to, finding some spaces like that.
I love it, man. All right. Well, without any further ado, we'll let you go. I appreciate your time. But this is Joe Jensen signing off for the Real Estate Investing School, reminding you the speed of action is key.